How are you guys doing today? It's Ralph here from Beyond the Hodl. Today on our weekly Bitcoin video, we're going to take a look at the commitment of traders to see how the large players are positioned in the market this week. We're also going to take a look at the hash rate as always, and then we'll go ahead and wrap it up with some price action stuff. So let's get started. Okay guys, so let's get started with my favorite part of the weekly video, and that's breaking down the COT. Because as you guys know, if you want to be a long-term successful trader, you have to, in order to have a consistent edge, in my opinion, that is identifying where the largest players are, who they are. If you can't find who they are, then you should at least know when they get into the market. And that's what we can do every single week with the COT here. So as you guys know, I post it every single weekend. So this weekend I posted this one, this week's update, and what we found out was that the asset managers had added 123 longs and they had decreased 126 shorts. Now this is a complete 180 from the previous week, which I'll show in just a few minutes on our trading video. So the importance here is that we have to start thinking, well, if we wanted this quarter to be bullish, then this is exactly what we want to see, right? We want to see the smart money, the large institutions start to add longs, reduce shorts, and then, of course, we want to support that with price. So we only have two things we're interested in. Is the smart money backing our bias, whether it's bullish or bearish, and then does price support the stance that we want? Of course, you can add more FA, more fundamental stuff, and then more price action stuff and stuff like that. But those are, when it boils down to it, those are really the two main things that we really want to focus on. So then when we go back into the charts to take a look at how these numbers actually look, you can see right here, let's get rid of all that data. You can see right here that the percentage of shorts, that's that yellow line right here, ended up going below the 60 line. Remember, the 60 line is an extreme of positions, so the shorts got too extreme, and then we said they were either going to go for the 80 or they were going to go ahead and get lessened. Of course, now we know the answer. And alongside with that, the net position here, we can see it went back above the average, which is really important because that net position is what will push the shorts lower in a percentage. And the last thing that we want to see would be to have the net position go net positive. Now we're at negative 60, so soon we'll go at the zero line. And how are we going to do that? Well, we're going to keep increasing longs. So if we zoom out a little bit, you can see this is the longs have been quietly increasing ever since February. You see the big drop in February, in late January, and that's what we thought. You know, something was wrong back then. But lately they have been going up, 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 up. And then this week, look what happened to the shorts. Well, like I said, right? If ever since February, late January, the longs had been decreasing, look at the shorts, straight increase. And right here from April 22nd, 16th, right around the high in Bitcoin, super aggressive increase in shorts. And ever since the low in the market in May, they have been decreasing their short position. Now the important thing here is that we have gone below the August high in shorts, and that is something we wanted to see, right? Because the idea is, we don't expect them to start adding long positions in spot market or even in derivatives market and actually like decide that the market is going to move in that direction without them closing those shorts. Because although they do play both sides of the markets, they don't want to, I'm assuming they don't want to lose money in those shorts, and that's where they aggressively get closed. You see how right here from one week to the next, it goes from almost 600 short contracts, 585 to be exact, straight down to two short contracts. So one short contract. That's ridiculous, right? And that's kind of what I want to see here. I want to see an aggressive reduction in shorts for me to feel comfortable about being able to buy the market. Now, because I'm starting to see a little bit of bullishness here, actually quite a lot of bit of bullishness, right? Because we have huge reduction in shorts and a huge increase in longs, which you can see perfectly by the net position. Because we're seeing the net position go straight up, and all this happening, I am more likely to want to be a buyer in this market for the first time in almost 2.5 months. So that's what we're thinking right now with the COT. Again, it's starting to look much more bullish. So now before we get to the price action part of the video, let's go ahead and take a look very briefly at the hash rate chart. So looking at the hash rate, last time we spoke about this, guys, we were straight down here at around 60, actually ended up hitting 58 when it was all said and done, but it was around 67, 60 when we were talking about it last. But currently the hash rate has recovered, and I'm going to attribute this recovery to, one, the difficulty adjustment. So as the hash rate goes down, right, if something happens in the market, then the adjustment that happens every 2 weeks will adjust, and then that will attract new miners into the market. And you can also say that maybe some of the rigs that have been moved around, they have been relocated, and they have gone ahead and been set up, and now they're running in different places. So again, we'll never really know the answer as to this specific part. I'm kind of speculating a little bit there. But it is very, very important to, and it's exactly what I said. It was very important to see it make a low, but then more important, you want to see it break a high, right? So if you were to draw a trend line right here, then you wanted to see it break this high right here. Again, something important enough caused it to go from this level straight down to that level. So I'm assuming that if we can start to make higher lows and then higher highs, then we can start to see a turnaround in the hash rate, which will be directly correlated to an increase in price. As of course, as we've now seen, the low here was on the 28th, and the price low was on the 26th. So you see, in this specific case, price led the hash rate, and now the hash rate again, will it drop again? Will it consolidate here? I don't know. I don't think hash rate, unless you know something fundamentally or seasonally, like the monsoon that hits China and stuff, or you knew that the China ban was going to happen, you don't really or at least I don't know of a way to predict the hash rate, again, unless you have insider information. So that's about it with the hash rate. Again, nothing too interesting going on. I really don't have any bias for it at the moment. My bias was really a drop here, and I expected a drop all over here because that was fundamental ideas. And now we just want to keep track of it every single week just to see, what it's doing, how is it flowing. So let's go ahead and take a look at price now. Okay, guys, so when we take a look at price, here it's when it gets a little bit more interesting, because remember, we just closed the quarter number 2, which means we're right at the open of Q3, which is also the monthly open. And if you remember from the last video, we had this orange line right here, this orange zone, and the idea was, because they added such large short positions, so the smart money, right, the asset managers, we saw through the COT, they added shorts, reduced longs. We wanted to find some sort of important level within this zone right here and use it as resistance. Now we still have that resistance level, but now you also have to think, if they added longs during this consolidation right here, there might be an important level during that zone. However, one thing we haven't talked about yet is the fact that there's 2 different ways to make highs and 2 different ways to make lows. Okay, to give an example of this, and what I mean by that is 2 different ways for them, the COT, to make highs and lows. We're gonna go take a look at this price action back here in February, because that's the one that we actually traded using this idea. So if we delete the first indicator here and we focus on just these 3, the first way is you can have the net position right here start to decrease as price goes higher. Now, intuitively, that shouldn't make sense, right? Why is price going higher when there is more short positions being added to the market? When we split up the net position, you can see the longs went well below the average line, and then the shorts start to increase well above the average line. So putting those 2 together, you get the net position. Then the net position finally went below the 0 line, made it a net short position, while price kept going higher. And you can see, as soon as price went net short after this big red candle right here, price didn't really move much after that, right? So again, that's one way that you can make a high. The other way would have been that price actually peaks first, and then you're going to see the orders, because remember, you get this one week later, then you're going to see the orders tell you, okay, there was indeed short, right? So they could have been buying this entire time, and then as the high is being made, then they'll start to lessen those longs, increase shorts, decrease the net position. And that's sort of what happened right here in the March low, where you actually didn't even get the net position start to switch until after the low. You see that right there? So you see the shorts are still increasing right here. The longs are basically flat, and then the net position finally started to turn 2 weeks after. So that's the second way, right? And again, use this scenario that we just did here at a high, and you can flip it for the buying, and then you can flip this one for the selling. So and that means in this specific case, one way could be either we keep seeing more bearishness if we can't go above this orange line, in which case we would want to see more longs being added. So that means that the smart money is buying anything and everything they can during the down move, and that's really good for us. That would be like the biggest neon sign you need to be I don't know if you want to buy with them, but the moment that you see price action turn around, you want to be buying, because again, if they were selling this entire move up, right, again, it doesn't make sense. How's there support? How's there gonna be support if they're selling? Well, there's not, and that's what you see. These two aggressive weekly candles happen. So the same thing for the buy side, right? If there's, let's say we have 3 or 2 more aggressive weekly candles, and during that entire weekly candle we can see they've been buying, well, what do you think is going to happen? Well, 2 very aggressive weekly candles, or however many aggressive weekly candles. And that's the perfect world scenario we'd like to see. You'd want to be tipped off before or ahead of time that before the high or the low is made, you want to be tipped off that they're either adding longs or decreasing longs. The one that we don't really like is kind of like what happened in the March 2020, where the low will happen. So let's assume this is the low here, right? If this is the low, let me hide this so you guys can see it. If this is the low as it hits the yearly open, which, you know, some people could argue it is, and then we're starting to see the longs being added and the shorts being decreased, right? That's the least desirable scenario, because you're going to be a little bit late. You might need bigger stop losses or whatever. So in this specific case, for that to be the true case, right, that this is the low, and then now we're seeing the delayed orders, I would want to see price go above this orange line, okay? So we thought it was going to happen. You see this, the 4th. So the quarterly candle opened. We went down. Then we went 3 days up. And then we started to look pretty strong. I thought it was going to go ahead and break the orange line. It did not. So what happens? I'm staying bearish, right? And again, we have seen an increase in longs. We have seen a decrease in shorts. But what could happen is price makes lower lows as they keep increasing those positions. And that's what I'm saying. You have to marry your price action. So you have to have some solid price action tools or ideas that, of course, we teach in the mastery course. You know, you will just be a little bit early in the move. Like, you know, had you sold here, I'm sure right now you wouldn't be crying about it. But, you know, it definitely went up a couple more times. So essentially, that's what I'm doing, right? I'm waiting. It's either going to be, I'm a buyer if we can break this. And again, in that specific case, you'd be above the monthly open and the quarterly open. That's very important, because that's exactly what we want to see, right? You don't really want to be too interested in being a buyer below the quarterly open. There are times where you will do that, and we will go into that in the future. But right now, I'm not interested at all. I would much rather have the safe, the higher probability bet of seeing a break and then maybe retest, and I buy that. Because if not, it's just going to go straight down. And again, when it goes straight down, I hope they keep increasing longs, because that'll be the easiest buy of your life that you'll ever make. So with that being said, guys, this is my Bitcoin analysis. Again, we focused really heavily on the COT, because that's really what's important. You really have to understand how they're adding and getting rid of positions on a week-to-week basis. So with that being said, guys, I hope you have a great day. If you found some value in this, give us a thumbs up, share it with your friends or family, and I'll see you tomorrow for the Ethereum and altcoin video. Have a great day, guys.